This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, March 19th, 2015. Euro dollar. So the euro has entered a period of legitimate correction this week after recently breaking down to fresh 12-year lows in the previous week at 104.62. The market could now be poised for fresh upside over the coming sessions to retest some previous critical support at 1098. This area should then act as a good formidable resistance point in favor of a lower top somewhere in this area ahead of a bearish resumption back to, below the recent lows that we saw at 104.62 and towards the parity level further down. But ultimately, only a break back above the high that we saw back on the 3rd of February at 115.34 would compromise the bearish outlook. Sterling dollar. So cable has also put in a nice little reversal after putting in a bullish outside day formation on Wednesday and trading back above 150. At this point, there is still room for additional gains in this market, though we have some good resistance in place now at 51.65 and a lower top firmly in place at 155.55 from going back to the 26th of February. So at this point, the setbacks are still favored with the downtrend still well intact, with the market seen below 46.35 and towards the next major downside extension towards the 140 area further down. Dollar yen. So after breaking above the 7-year high from December at 121.85, the market stalled out just over 122 and consolidated for several sessions ahead of this latest pullback. However, the overall structure continues to be highly constructive and setbacks have been well supported ahead of 119 thus far. Ultimately, any additional decline should be very well supported into the 118 area in favor of a higher low and fresh upside extension above 122 and towards next key psychological barriers at 125 further up. Only really back below 115.55, the low from December, would compromise the constructive outlook. Euro Swiss. So Euro Swiss continues with its consolidation over the past several days, with the market in the process of recovering out from those historic lows that we saw back on the 15th of January. At this point, any setback should continue to be very well supported ahead of 104.15 in favor of a continued recovery outlook through 108.15 and towards next key psychological barriers at 110 further up. Aussie dollar. So Aussie dollar remains locked within an intense downtrend despite the latest reversal that we saw on Wednesday, and ultimately any rally should be very well capped ahead of 79.13, the previous lower top, in favor of a fresh downside extension below 75.60 and towards ultimately the 70 area further down. Dollar CAD. So dollar CAD remains locked within a well-defined uptrend and the market is highly constructive. At the same time, gains have had a hard time establishing above that previous 5-year high that we saw in January at 128 and only managed to break above but could not close above the level. This has opened the door for a corrective decline back into a familiar range, though the market is expected to be very well supported on dips ahead of 123.50 and eventually in favor of a break and close back above 128 and through Wednesday's key high at 128.35 towards the 2009 peak at 130.65 further up. Only back below 123.50 would compromise this outlook. Kiwi dollar. So although Kiwi has recently rallied in over the past few sessions, the market does remain well capped below 76.14, which is now the ideal lower top ahead of the next downside extension below 71.76 and towards potentially the 65 area further down. At this point, only a break back above 76.14 would compromise the bearish outlook, with any intraday rallies expected to be very well capped ahead of 76. SPX 500. So the market looks like it could be poised for a resumption of gains and a break to fresh record highs after recent setbacks stalled out at 2040. There had been signs of a potential topping formation, but this was negated on a break back above 2100 on Wednesday, and the door is now open for a break above the high that we saw, the record high from the 25th of February at 2120 and towards the 2200 area further up. If you look at this market, the breakdown from 2120 to 2040 represents an 80-point move. So if we do break above 2120, then that would project a measured move of 80 points to the upside to 2200. At this point, back below 2040 would now be required to take the immediate pressure off the top side in the SPX 500. Gold. So gold has put in an impressive recovery over the past couple of sessions, with the market now stalling out ahead of that critical 2014 base at 1131 and putting in a reversal day to break back above some key resistance at 1167. The bullish reversal now suggests that the market could still be in the process of a more meaningful longer-term base, though we will need to see a break all the way back above the high from the 2nd of March at 1223 to confirm this bias and accelerate gains further. At this point, inability to clear the high from at 1223 from the high from at 1223 from the 2nd of March will keep the pressure on the downside and still keep the possibility for a retest of that 1131 2014 base in play.